Okay. Uh, Good evening to you all. Now, today we are going to start next new subject, first unit. This is called financial statement analysis and business valuation. Now, this is very much important subject for accounting and finance field, especially for decision making. Investors and other users, they are mainly concerned about the financial statement and specific features of the financial statement, and also they are going to forecast about the future situations by using business valuation part, right? Then we can start this with that course outline. I already uploaded course outline. You can aware with that. Mainly you can see the code, course code of this course units and name of the course unit, resource persons of this course units. Uh, we have three resource persons lecture panel, Mr. Saman Bandar and Chaturaliyanage and myself. Now, these are the learning outcome as per your syllabus. You can see this course outline and learning outcome. Financial statement analysis and business valuation course units is designed to make the students to analyze, interpret and apply financial statement analytical techniques in reviewing corporate financial statement. Further, the course units intend to improve the ability to value a business using different methods and techniques of financial valuation. Now, after reading this outcome, you can aware about the content. Here, mainly we are going to focus. We are mainly going to focus on this financial statement, then line item of the financial statement, and quantitative as well as qualitative characteristics of other annual reports and other internal and external details or information. And also we are going to forecast and predict about the future situations by using existing data relevant to the previous years. Then again we are going to forecast about the future situation. Then here uh, if you go to the learning outcome of this lesson, here, after completing this lesson, you should be able to strong understanding of each component of the principal financial statement published by corporate sector, and you should be able to apply financial statement analytical tools. There are a number of vertical, horizontal, and ratio analysis and other cash flow technique to evaluate the business and to measure the performance of organization. And again you should be able to analyze and identify any manipulation technique being used in financial statements, right? Those are very much important. Next, use financial ratios for profitability to measuring profitability, efficiency, capital structure, cash flow, the liquidity and credit analysis. And also you can use you should be able to use financial statement analytical tools to make important business decisions. Then especially you have to decide now if you are in the stock market or investment process, then your one of main decision is to buy a share or hold in share or sell in share. Then you have to take that decision, you have to make that decisions based on information, available informations. Here under the financial statement analysis we are going to concern about this. Then utilize the financial statement information and various valuation technique to determine the value of a business. and evaluate the applicability and the limitation of analytical tools of reviewing financial statement and valuing the business. Then there are some limitations in this type of if you use this type of financial analytical tools. There are some merits as well as demerit, or advantages as well as disadvantages. Then we should have good evaluation before using that type of technique. We should have good evaluation about each technique. Sometimes we have to use two or more techniques complementary, because there are some limitation. Then we can overcome that type of issues by considering two or more technique together. Then now you can see the content here. If you think about this content, today we are going to discuss overview of financial statement analysis and business valuation. Then you can see another topic include different types of horizontal and vertical analysis. Yes, you need to know that term. Actually, you are aware with that name and that mean technical terms. We have more than 60% accountant and accounting, the accountant and students who are working under the accounting division, so the finance division. Then it is easy to understand this type of technical terms. However, we have some software engineering, software engineers and other that mean students from the other disciplines. Then we need to explain about the horizontal and vertical analysis technique. Then if you are going to analyze or analyze between years, the same, by using the same organization and the data from the same organization, we can identify the trend and the deviation during last few years. Then if you analyze that type of data during the period, during the last period, then we can use this type of horizontal analysis. In some cases, we need to consider the same time period, and we have to take some common value. Based on the common value, we can analyze, or we can interpret some line items. For example, if you use common size financial statement, that is under the vertical technique. In addition to that, most popular thing here, the most popular technique here, this is called ratio analysis, financial ratio analysis. Under that part, we can see liquidity ratios, capital structure, or the leverage ratios, profitability ratios, then activity ratios, investment or the market ratios. There are a number of classification, a number of categorization, or standard categorization. Then those are under that ratio analysis part. In addition to that, here changes in financial positions and fund flow or the cash flow statement, those are under this category, that means an analysis of financial statement. As you all know, there are a number of financial statement in this in the organization. If you think about the annual report, there are a number of component or elements in that annual report. Not only this financial statement, then directors or the management report and other then CSR project and other details. There are a number of specific items in that financial report or the annual report. Then those are, then there are some qualitative factors and also quantitative factors, financial factors or financial statements and line items or financial summary. Those are very much important for investors for making their decisions. Then in addition to that, we have to concern about the business valuation technique. Yes, we have to pay much attention on that. There are a number of methods for valuing the business. Then business valuation part also very much important. After valuing the business, then that means we can identify the intrinsic value. intrinsic value, and we can compare with the real market value, right? That not real, the market value and the intrinsic value. Then you can make the decisions. Then before investing in a particular stocks, then you have to concern about the intrinsic value or the that mean business value and the market price. Then after comparing them, you can decide whether you are going to buy that share or the sell or the hold in your shares. Those are very much important decisions. Therefore, we mainly we have to discuss about the business valuation technique. There are a number of techniques. Then we have to apply them. Right. Now this is the method of evaluation and method of teaching. Now we have lectures and discussions and case study. Here this is based on yes, more than 50% of this content we have case studies, right? Actually this content is not too large, but we have to get practical examples, and we have to discuss and we have to evaluate. Some manipulation also there, right? Then we have to consider that, we have to check that type of information, and we have to get them, and we have to analyze them, and we have to compare with the previous years and also with the competitors and with the industry norms. After comparing them, we can make decisions. Then therefore here we are mainly focused on that case studies. That means after getting that annual report from the reputed company or the listed companies, we can evaluate one by one, then deeply we can analyze it, right? Normally we can see a minimum requirement or the disclosure requirement of that financial statement. Then however nowadays we are aware with that best financial statement, right? CS Sri Lanka, they are normally they are finding or they are providing some awards for them. Then that mean best financial statement or the best annual financial annual report, right? Best annual report, they are selecting them based on that based on each sector, right? Then again we are considering that type of here that type of information, given information and their valuations, right? Here then this is the scheme of evaluation, right? Further we have to discuss that type of case, right? Then here this is the scheme of evaluation: case studies, online quizzes, assignments, presentations, and end semester examination. Then you can see that marks allocation and structure of your assignment. We have arranged one assignment for the financial statement analysis part. Now here we have major two component of this course unit. One component is financial statement analysis, another part is, this is directly linked with each other, but the second part is business valuation. Then financial analysis part, it will discussed by Mr. Saman Bandar and myself. That business valuation part will discuss by Mr. Chaturaliyanagi. Then we allocated 15% for business valuation assignments, and another 25% for financial statement analysis assignments. Then rest of that 60% for the final examination, end semester examination. Here actually under the now at the very first day, I should say, now assignment 1, it is based on market data, that means market financial statement. Yes, you have to take 2 or 3 organization, competitive organizations, and you have to compare with the previous 4-5 years, right? And sometime you can use then your statistic knowledge, and you can show that things to graph, chart, and other values or the measurements. In addition to that, you can take that analytical tools, that mean vertical analysis, then horizontal analysis, ratio analysis, you can use to show that to convince that important finding, right? Then it is also practical one, right? It is easy to download. You can download that means you can download annual report from CSC web. Easily you can download, right? Free of charge you can download it, and then your task is to analyze, and you have to take you have to prepare that mean brief introduction about the organization, and about organizations. You may have 2 or 3 organizations. Then you have to say something about the product and the service given by the organizations. Then you can collect data, and you can analyze it by using analytical technique. Then finally you can conclude about the conclude based on that analysis, right? Then whether we can see growth or the declining or the stagnating, then you can and compare 2 organizations, and 2 organization or 2 or 3 organization with industry norms. Just you can identify that stage of that particular organization, right, where they are below the organization, that means industry norms, or the above the industry norms. You can get idea about this. This is the course outline or the schedule. Overview. Today we are going to discuss overview of financial statement. Then next one, next time we have to yes, you also can download number of annual report, and here then we have to read the financials. We are yes, we are calling that reading the financial statement. Financial then how to read the financial statement, and how to understand financial statement, and what are the key component of financial statement, and what are the line items of each financial statement. We can see different pattern for manufacturing sector, service sector, non-profit organization. That been then there are number of specific factors or the sectors, and you can see different financial, little bit different financial presentations, but you can see the same idea. Then if you see the income statement or comprehensive income statement, then you can see same results for the manufacturing organization, or service oriented organization, banking and finance organization. You can see the their performance, right? Operating performance, financial performance. Then if you go to the statement of financial position, you can see the financial positions. No, you can compare financial conditions of that organization, right? Then first 4 sessions yes are allocated here for me. Then financial statement analysis technique. Then next time we can discuss horizontal and vertical technique, and here financial statement analysis technique can yes, in addition to the horizontal and vertical, we have ratio analysis. Then based on then again we can see case study. Okay, by using the case study we can that mean by using financial statement analysis, that mean by using annual report we can analyze them, and we can compare with other organization, and we can make some conclusion based on the results. Then you have, yes, after completing first 4 session, you are given that assignment number 1, financial statement analysis, right? Then your due date is yes, 10th week. Yes, you have 5 weeks for completing your assignments, right? Then next one, analyzing sorry, cash flow analysis, cash flow statement analysis. Here and again you can discuss case studies under this component. Mr. Saman Bandara will discuss it, and prospective and credit analysis, and then financial distress. You can discuss all those things, and the capital structure, solvency analysis, again by using case studies. Then next one, analysis analyzed and identify any manipulation technique being used in financial statements. Then again case study. Yeah, you can compare number of financial statement, not only in our country, You can compare then top level organizations like Toyota, then Nissan, United Motors. Likewise, then you can see that IBM. You can compare their financial statements and some issues related to that, some manipulations, right? Then introductions uh, here, then after that we can see that introductions to business valuation and framework and business valuation methodology. Mr. Chatura will discuss uh, business and equity analysis and valuation method for business decision, earning forecasting and valuation technique, merge and acquisition decision, and you can see two session for that, merge and acquisition, and business valuation case study. Yes, ultimately you can see that case study. At the final session, I hope to discuss, that mean overall, that mean recapture session should be there. Then we can discuss overall content and issues of that course units. Right, that is the course content and schedule. These are the recommended reading. You can see financial statement analysis and security valuation. Then there are a number of books here. This is the fourth edition. Now we can see fifth edition, 2015. This is from Stephen Penman. Here, in addition to that, next one, second one, financial statement analysis, 10th editions. This is from Dr. Subramaniam and Halsey. Then here also we have Indian editions. If you will, if you wish, then you can buy that type of books, right? In addition to that, I hope to upload some books and lecture notes, right? Lecture notes relevant to this one, or the lecture guides. Then you can see a number of recommended text. Right, now today's session is overview of the financial statement and business valuation. Here, lesson objective here. To explain this, after completing this course, this lessons, you should be able to explain business analysis and its relations to financial statement analysis. Actually, before studying the financial statement analysis, we should have overall knowledge and how to link that financial statement analysis with theoretical background. We need to think with that theoretical background. Now here, main component is business analysis. Yes, business analysis. Then financial statement analysis is a part of that business analysis. Then we have to discuss that component. There are a number of component under the business analysis. One of the key technique is financial statement analysis. Then we have to discuss overall picture, or we have to get idea about the overall picture of the business analysis. Then identify and discuss different types of business analysis and describe component analysis and that that constitute in business analysis, and explain business activities and their relations to financial statement. Describe the purpose of each financial statement and linkage between them, then relationship between different types of financial statement, and also to identify the relevant analysis and information beyond financial statement, analyze and interpret financial statement as a preview to more detailed analysis, and apply several basic financial statement analysis technique. Then vertical and horizontal and ratio analysis technique. Define and formulate some basic valuation model, and explain the purpose of financial statement analysis in the stock market. Then those are the objectives of this lesson. Now, if you think about the overview of the financial statement analysis, actually you can see these basic uh, that items or the content relevant to these discussions. Now, if you go to the business analysis, introduction to business analysis and type of business analysis and component of business analysis, those are very much important to identify the place and the background of the financial statement analysis. In addition to that, financial statement analysis, then we can identify the business activities, financial statements and business activities and additional informations in the annual reports, all we can discuss under that category. Then we can see that financial statement analysis preview, analytical tools and basic valuation model and analysis in an efficient market. This is the scope of this course units, right? Then if you move to the users, right, further we can discuss. Now, if you see this circle, then you can see that financial information and their users. Then you can see some management or the executives and trade creditors, shareholders and prospective investors. They are always concerned about the financial information, not only the quantitative, then they are concerned about the qualitative informations too. Then trade creditors also, they are always concerned about the financial situation of the business and the performance of the business, and there are other qualitative changes. For example, if you think about the direct changes, right, those are very much important for the future of the organization, right? Bankers, and they are also concerning before providing loan facilities and other credit facilities. Then laborers, they are also concerned about the financial information. They are one if you think about the laborers or the workers point of view, they are trying to get that additional salary or salary increment or the bonus or other benefits. Another one, they are concerning about the jobs, that means stability of their job. Then consumers and society also, and government institutions. There are a number of other organizations. I put here very limited number of users here. Further we can discuss. Those are the uh, 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 users of financial statement. Now, if you see this document, actually I got this from that Subramaniam book. Then if you see this one, now this is the process. Now process. Then you can see that circle. Prepare financial statement, analyze financial statement, then get the additional information and make decisions, operate in business, that means operate in finance and investment decisions. Then implement decisions, that mean make buy, or that mean buy or sell shares or the buy organizations. All we can see after implementing that thing, then again we can see the feedback and again prepare financial statement, that mean annually, or we can see that process again, analyze, and they decide whether they are that mean uh, selling that shares or the business, or buying or they add new things and that new investment, right? Then theoretical link. Now, if you go to the theoretical link here, now it is not very much clear, right? But this is clear, no? Right? Uh, Here, fundamental analysis. Another one here. This is directly that investment decision directly linked with that number of analysis. One is called fundamental analysis, then technical analysis. You aware under the corporate finance. I think you aware with that, no? Fundamental analysis, corporate, that mean technical analysis, right? Here this financial statement analysis also link with that type of analysis and information efficiency, right? Now here under the fundamental analysis, main task is here knowing the business, then study about the business, aware about the business and their product and knowledge base and competitors of that organization and rules and regulations or the constraints or the barriers. Then based on that, then we can implement some strategies to overcome that type of issues. Then analyzing, to know about the organizations, another important one is analyzing informations in financial statements. And outside of financial statement, we can see number of details, number of information, important information from that. Then develop in forecast or predictions. Then again we can determine the future payoff, and we can forecast future payoff and convert in forecast to a business value, that means to a value. Then we can use that type of model to forecast about the future value of that organization. As I told earlier, now that is the final decision. Trade on valuations. Then outside investors compare value with the price to buy, sell or hold. Buy, sell or hold. Then inside investors compare value with cost to accept or reject a strategy, right? Then if you think about the outside investors, they always compare that this type of intrinsic value come from this fundamental analysis, then compare with the actual market value. Then further we can discuss that matter. This is called the framework, business analysis framework, not financial statement analysis framework. This is a business analysis framework. Now you can see that this component. Now under the business analysis, you can see this definition. Financial statement analysis is a part of the broader task of business analysis. Now if you go to this business environment and strategy analysis, then you can see that industry and strategy analysis. Further we can divide into number of segments here: accounting analysis, then financial analysis and prospective analysis. This is regarding the forecasting and future valuation techniques. Then if you take this total area, that is under the financial statement analysis, it will cover accounting analysis, financial analysis and also the prospective analysis. These are the component of this financial statement analysis and also the part of the business analysis. Here under the financial statement analysis, you can see another subcomponent: profitability analysis, analysis of sources and uses of funds, and risk analysis or credit analysis, all are under that category. Then we can compare with the intrinsic. Yes, we can find out the intrinsic value and we can compare intrinsic value with the market value. Then we can use that details to make decisions. Now from this point onward, we are going to discuss just business analysis. Then business analysis and relevant categories as mentioned here, right? You can see number of slides based on this chart. Then you can, yes, then again and again we have to discuss this chart, right, and link with the component included in here. Right now, if you go to the financial statement analysis, again you can see the previous definitions. It is a part of business analysis. Business analysis is the process of evaluating companies' economic prospects and risk for the purpose of making business decision. Here under the business analysis mainly focus on this type of economic prospects and the risk of the risk for the purpose of making business decisions. Then business analysis here include number of segments here. Business analysis include analyzing company's business environment and its strategy and its financial position and performance. Then here this is then under the business analysis, this part linked with the financial statement analysis. Now if you read them, financial statement analysis is the application of analytical tools and techniques to general purpose of financial statements and related data to derive estimates and inferences useful in business analysis. Then here deeply we can analyze that data by using financial statement analytical tools and techniques. Then finally we can use that type of technique and the results of the analysis for making business decision. Right, there are number of component and definitions here. Those are very much important to understand the financial statement analysis and the link to link the financial statement analysis with the business analysis. Right, these business decisions extend the equity. Now here you can see after reading this document, right, I included the descriptive slides here due to this type of online discussions. That means more than 50% of students, they are concerned about their downloaded document. That's why I included descriptions on this and definitions as much as possible. You can I tried to include that descriptions, right, descriptions. Then after reading them you can easily understand about the content. This business analysis extend the equity and debt valuations, credit risk assessment, earning predictions, audit testing, compensation negotiations, and countless other decisions. Then business analysis aids in making informed decisions by helping structure the decision task through an evaluation of a company's business environment and its strategy and its financial position and performance. If you refer the previous slides, again you can see these contents. Here we are considering the evaluation of companies or the business environment and its strategy and its financial position and performance. Here we are under the financial statement analysis. Here we can mainly focus on this financial position and performance and prospective analysis. And initial steps in business analysis is to evaluate the business environment and strategy. Business analysis is useful in wide range of business decision. Here you can see some kind of business decisions. Then business analysis is very much useful for this type of decisions. Now there are number of questions whether to invest in equity or in debt capital or debt securities. If you think about the investor's point of view, there are a number of opportunities to invest. He or she can invest in the stock market or gold market or any other financial instruments, right? There are a number of own business, they can invest in different ways. Then at that time, then they are concerning about whether they are investing, or if you think about the organizational point of view, then how they invest their financial assets in equity and equity capital and or the debt capital. Now you know that the difference between equity capital and the debt capital, right? Risk and reward, yes, already, yes, they are by the shareholders of under the equity capital, right, equity shareholders. But if you go to the debt capital, then we can think about the debt category, or they are not willing to bear that type of risk and risk, right? They are expecting only the rewards. Then whether to, next question, whether to extend credit through short term or long term loan, right? Again, we have to think about the working capital, or the short term loan, or the long term loan. Then we have to consider number of factors with that cost of capital and other uh, terms should be linked with this question. You are aware with, that type of cost of capital and long term capital under the corporate finance. Then how to value a business in an initial public offering, right? Then if they are willing to offer new shares into the to the market, then at that time they should concern about the prices and values of shares or the business to determine that prices and the market value. Then and again, business valuation, business analysis, it is important to evaluate restructuring, including merge and acquisitions, and that mean divestitures, or the merge and acquisition. It is a separate area. Then it is also under that business valuation part we hope to discuss, and we have separate 2 sessions for that, right? Further you can aware with that. Then again, if you go to the overview of the financial statement analysis, again it is a integral part of uh, business analysis. The goal of business analysis is to improve business decisions by evaluating available information about the company's financial situations, its management, its plans and strategies, and its business environment. Now, these are very much important for decision making here. Uh, Therefore, main goal or the purpose of this business analysis is to improve, that mean improve the business decisions by evaluating available information relating to company's financial statements, company's qualitative characteristics, its management, and their plans and strategies, and business environment. Then business analysis is applied in many form, and is an important part of the decisions of here you can see decision makers, then they are using business analysis for their decisions. Now one uh, users of that business analysis is security analyst or the investment advisors, then others fund managers, investment bankers, or the investment institutions. As you all know, there are 2 types of investors in the stock market. Then one is individuals and organizations. So the individuals and the that mean institutions, institutional investors and individual investors, right? Then here in investment bankers, credit traders, you know that credit trading organizations, no, there are a number of credit trading organization, right? They are ranking, they are rating organization based on that credit, that means worthiness and financial stress, based on the financial stress and financial worthiness, right? Then that type of organization also concerned about the business analysis, and they are using that results of the business analysis for making decisions. Corporate bankers and individual investors, last one you can see, individual investors, they are also concerned about the business analysis, right? Here here another part is credit, yes, credit analysis. Credit analysis also a part of business analysis. Creditors lend funds to a company in return for a promise of repayment with interest. This type of financing is temporary since creditors expect repayment of their funds with interest, right? Then here that creditors and before lending that funds, then they are concerned about the business analysis again. Then here you can see trade creditors and non-trade creditors, and why they are using that financial statement analysis or credit analysis for their decisions. You can see then another one is equity analysis. Then equity investors provides funds to the organization. As I told earlier, now you can see risk and reward transferred to the ownerships. Now equity investors provide funds to a company organization in return for the risk and rewards of ownership. Equity investors are major provider of companies financing, then major source of financial financing here. Equity analysis, equity financing, also called equity or share capital, offers a cushion or the safeguard for all other form of financing that are senior to it. That means after settling all the other commitment, then in equity holders can take their take their profit or return. This means equity investors are entitled to the distribution of a company's assets only after the claim of other senior claimants are met, including interest or, and preferred dividends. As a result, equity investors are said to hold a residual interest they are getting. Then again, this implies equity investors are first to absorb losses when a company liquidates, although their losses are usually limited to the amount invested. It is depend on the nature of the organization. If you think about the proprietorships or the partnerships, at that time you can see different conditions. However, they are concerning yes. However, when a company prospers, equity investors share in the gains with ultimate unlimited upside potentials. Therefore, unlike credit analysis, equity analysis is symmetric in that it must assess both downside risk and upside potential, because equity investors are affected by all aspects of a company's financial conditions and performance, and their analysis needs are among the most demanding and comprehensive of all users. Right now, you can see lengthy discussions on this equity analysis. Here again, this is linked with the fundamental analysis and technical analysis. Individual investors who apply active investment strategies primarily use technical analysis or fundamental analysis or combination of these two. Technical analysis or charting or search for pattern in the price or volume history of stocks to predict future price movement. As you all know, under the technical analysis, we are going to identify the pattern of the previous data or the prices. Based on that, we can predict about the future. We can make decision based on, we can identify the movement of stock prices based on the previous pattern. That is under the technical analysis. I think you are aware with that matters under the corporate finance subject. Then next one, fundamental analysis. Under the fundamental analysis, which is more widely accepted and applied, is the process of determining the value of a company by analyzing and interpreting key factors for the economy, industry and company. Here under the fundamental analysis, we are mainly focused on the company information, financial as well as non-financial, industrial situation, industrial, financial as well as non-financial information, and economic changes, economic or the macroeconomic determinants and macroeconomic changes also concerned by fundamental analysis. Then link with that company, industry and the economy analysis, those are the part of fundamental analysis. Here then major outcome or the major goal of fundamental analysis is to determine intrinsic value. At the beginning I told that word, intrinsic value, also called fundamental value, intrinsic value or fundamental value. The main purpose of this fundamental analysis is to identify that fundamental value or the intrinsic value. Then we have number of method to get that fundamental value. Then I think you are aware with that fundamental analysis. Then after getting that intrinsic value, you can see a number of method for getting that fundamental value or the intrinsic value. We have dividend discounted approach, and you are aware with that approaches, or the price earning approach. Then intrinsic value is the value of a company determined through fundamental analysis without reference to the market value, right? Without reference to the market value, then we can concern about the other details, and based on that we can determine the fundamental value or the intrinsic value. After getting that value, we can compare that fundamental value or the intrinsic value with the market value. Actual market value may be changed. No, we cannot say actual market value should be tally with the intrinsic value. Intrinsic value come from the different model and the formulas. Then the market value, it is more practical and more based on that informations. Then if you think about yourself now, if you are going to invest your funds or the financial assets in the stock market, then for example you have 10 million rupees, right? Then before investing that 10 million rupees, you may concern about the number of factors, that those are called determinants of stock prices, right? Determinants of stock prices. Then what are the important factors to determine stock prices? First of all, you should be aware with that. Actually this is linked with the research, right? If you are willing to continue your research in this area, right, in this that mean in the next year, then you have to concern about this fundamental analysis, then technical analysis and stock valuations, financial statement analysis. That is good area, that is a good area for determining your research topic and research field. Then we can compare that. Yes, we can compute that intrinsic value or the fundamental value. Then that fundamental value not tally with the most probably we cannot see equal value fundamentals and the market value. Rarely we can see equal or approximately equal value, right? But most probably we can see different value for in the market and the intrinsic value. Then now if you know or if you are aware with that situation, that means market price, and if you have any particular method for getting this intrinsic value by using your knowledge or by using other, that mean reputed broker companies knowledge or the stock analyst knowledge, you can get this intrinsic value, right? Then brokers association or the brokers companies of the stock markets also concern this type of fundamental values or the that mean fundamental values, or the most probably they are using technical analysis. They are identifying the pattern of that prices. Based on that, they are predicting about the next prices, right? They are using some ratios, right? Then they are using that type of things to make decisions. Now you can select one topic for your research, right? What type of factors are very that mean important for determining stock prices, right, in the stock market, and what type of information that mean important for making decisions, and what are the important that mean details used by the uh, stock analyst or the brokers or the research division of that type of brokers or association, brokers company, right? Then those are again under the uh, there are a number of research. There are a number of research based on that criteria. Then, however, after computing that intrinsic value, we can compare with the stock market value. The stock market value, it is always available. No? We can get stock prices of DFCC, stock prices of then bank of loan, oh, sorry, commercial bank, right, or dialogue, or the then other hospitals, that mean Asiri hospital, then we can see the number of organizations, no? We can get their price. Now if we have model for getting this intrinsic value, right, then we can compare, right? Now if we go, if you take this one, first one, buy when a stock's intrinsic value, then buy when a stock's intrinsic value exceeds its market value. Intrinsic value is higher, market value is low. Then what is the decisions? Now if you think about your investment, as I told earlier, now you have 10 million to invest, right? Then you have number of companies. Then as per the portfolio theory, you are not going to invest in the same organization, no? Don't put all eggs into the same bucket, no? That is the concept now, that is called portfolio management, right? However, when you are investing them, you have to compare. Yes, there may be a number of companies. Now if you take only one sector, then you can compare their intrinsic value with the actual market value. Then what is the decision? Why we are going to buy that type of shares? What is the decision? What is the logic behind that? Now intrinsic value is higher, market value is low. That may be, yeah, what is the reason? Now there may be chance to increase that market price. There may be chance to increase that market price, because real value, the intrinsic value means actual real value. Real valuation is higher than the market value. Then if we buy that things, now it is not that mean uh, it is will it will get benefits. One side here we can see real value here, another side it will increase that prices, right? Then therefore you can concern about this type of shares. Now another sale type of shares here, sell when a stocks of a particular company, uh, then if you compare with the market value, then market value exceeds this intrinsic value. Market value is higher, then intrinsic value is low. Then again we can see, yes, there may be a chance to decrease that stock prices, right, into that intrinsic level. Then at that time it is not suitable to purchase again, or if you have that type of shares, then it is better to sell, right? That is the another important decisions under the intrinsic or the fundamental analysis. Another one, hold when a stock's intrinsic value approximates its market value, right? If it is approximate mean equal, then at that time it is better to hold, better to hold at that time. No, yes, we don't have any gain, right? Then we can hold that type of shares. Those are the decisions under the intrinsic value. Intrinsic value. Then to determine intrinsic value, an analyst must forecast a company's earnings or cash flows and determine its risk. Now we can say, now it is very easy to say, now anyone can, yes, anyone can compare if you have intrinsic value and market value. It is easy decision, no? But if you need to get this intrinsic value, yes, you should have clear idea about the process of getting this intrinsic value. It is not a easy task. It is not a easy task. Then we have to concern about the about few matters. Now this is the way of getting that intrinsic value. What are the sub activities under the intrinsic value computing process? Now to determine intrinsic value, an analyst must forecast a company's earnings or cash flows and determine its risk. As you all know, then we have to think about the variability of that return, that is called risk. Variability of return is called, yes, risk. Then we have to think about the risk and the company earnings, earning forecast, cash flow estimations, all are very much important. Now after purchasing a share, then we can expect that dividend flows and terminal cash flows, right? There are a number of cash flows. Then we can get that present value, and we can use some mathematical technique to take that value. Mathematical model we can use for getting that intrinsic value or the fundamental value. This is achieved through a comprehensive in-depth analysis of a company's business prospects and its financial statements. By using the previous financial statements, then we can determine that intrinsic value. Once a company's future probability and risk are estimated, the analysis uses a valuation model to convert these estimates into a measure of intrinsic value. That means this is under the valuation part, business valuation part, right? We have separate segments under the subject. Then under that point we can value a business, right? We can value a business. Then after, by using that fundamental approach, fundamental analysis approach, then we can compute this business value, then intrinsic value, then we can compare with the market actual market prices. Then usefulness of this intrinsic value or the fundamental value. Intrinsic value is used in many contexts, mainly equity investment and stock selection, as we discussed earlier. When you are stock selecting and making decisions to buy or hold or sell that shares, then we can use this intrinsic approach, intrinsic value approach, or the fundamental value approach. Initial public offering, when we are issuing that new shares to the market, at that time we have to think about the initial, that means intrinsic value. If we have that type of intrinsic value, we can think, we can decide the stock prices. Then private placement of equity, merge and acquisitions, further we can discuss. The purchase or sale of companies without trade securities. Then when we need to make decisions on the business, whether we need to purchase new business or sell existing one, then we can use this intrinsic value approach to make that decisions. But there are some limitations, right? If you think about the stock market organization, the stock market company, If you have listed company, that means listed company, it has some stock prices, dividends, then we can see that information. But if you think about the proprietorships or the other organization, at that time it is not a easy task to take that dividend amount or the interest amount or other details. No, it is difficult to estimate their value when they are selling business. Then we cannot get that type of informations to value that business, right? It is not an easy task, but if you have a listed company, most probably we can get that information here. If you go to the here now, the next task here under the business environment and strategy analysis, it has two component, industry analysis and strategy analysis. Under the industry analysis is the usual first step, since the prospects and the structure of its industry largely drive a company's profitability. Industry analysis is often done using framework proposed by Porter in 1980 and 85, or value chain analysis. Now these are the theoretical approach. Under this framework, an industry is viewed as a collection of competitors that jockey or for bargaining power with consumers and suppliers, and that actively complete among themselves and face threats from new entrants and substitute products. Now here, as mentioned here, then we can use this framework for making industry analysis, then value chain analysis approach, or the framework proposed by the Porter. Then again, industry analysis must assess both the industry prospects and the degree of actual and potential competition facing a business. Now that is under the industry analysis. Then strategy analysis is the evaluation of both the company's business decisions and its success at establishing competitive advantages here. Then strategy analysis include assessing companies' expected strategic responses to the business environment and the impact of these responses on its future success and growth. Further, it requires scrutiny of a company's competitive strategy for its product mix and cost structure. Right after reading them, yes, you can see comprehensive details regarding this business environment analysis and strategy analysis. Then analysis of a company's future prospect is one of the most important aim of business analysis. Right, it is a part of business analysis, like financial statement analysis. It also is a subjective and complex task. To effectively accomplish this task, we must adopt an interdisciplinary perspective. This include attentions to analysis of business environment and strategy. Right, there are a number of important details here. Then if you move to the second part of this detail, analysis of business strategy seeks to identify and assess a company's competitive strength and weaknesses along with its opportunities and threats, right? I skip some slides because you have detailed slides here. Uh, Here, next one, prospective analysis. Now, here if you go to this slides again, now we are in prospective side. Yes, prospective analysis. This is the next part, prospective analysis, and also we have to concern about the accounting analysis. Accounting analysis and financial analysis here. Financial analysis here. If we go to the prospective analysis, company value, so intrinsic value is estimated using a valuation model. Inputs to the valuation model include estimates of future payoffs, that mean cash outflows and inflows, uh, prospective cash flows or earnings, and cost of capital, estimated cost of capital. The process of forecasting future payoffs is called prospective analysis. Now, as you all know, it is very easy to discount future value into today value. That means discount the present value, right? How to get that present value? Now, intrinsic value mean, yes, present value of future expected cash flows, right? But the problem here, it is difficult to determine or the estimate about the actual cash flows in the future, right? Then we can estimate them, but how far then we cannot say it is tally with the real conditions, right? Then we can estimate it. There may be a chance or the probability for the future expected cash flow. Sometimes we have to think about the sensitivity analysis. No, you know that way. Then we have to use the probability concept to forecast about the future or the expected cash flows. And the too difficult task is to determine the cost of capital for the future period, right? It is also very much difficult, right? We have some calculations or model for computing formula for computing cost of capital under number of assumptions, number of constraints, right? We can determine it. However, the process of forecasting future payoffs is called prospective analysis. This is yes, actually we cannot determine exact future return, exact future cash payoff, but we have to determine, or we have to estimate or forecast that amount, right? Otherwise we cannot make decision, right? As much as possible we have to estimate that amount logically, right? Then there may be some pattern. If you think about the previous pattern, or the based on that you can determine about the future cash flow. Sometimes you have to use software support to forecast about the future cash flows, future payoff, right? And we have to amalgamate that software knowledge and mathematical knowledge as well as your practical exposure, right? Based on that you can forecast about the or you can judge about the future cash flows. That is under the prospective analysis. Previously we discussed that part. That is under the prospective analysis. To accurately forecast future payoffs, its prospects and its financial statements. Evaluation of business prospects is a major goal of business environment and strategy analysis. Now you can identify the major or the main purpose of this type of business strategy and business environment and strategy analysis, right? Now you can, based on that we can estimate and we can conduct that type of analysis, prospective analysis. Then component of financial statement analysis. Now a company's financial status is assessed from its financial statements using financial analysis. Here, this is under the financial analysis, financial statement analysis. In turns, the quality of financial analysis depends on the reliability and economic content of the financial statement. Right? In some cases, yes, as you all know, due to that tax benefits and other manipulations, we cannot yes, most probably we cannot expect exact or the real situation or real picture from the financial statement, right? Then if you think about the financial statement, what are the main financial statement? Income statement, that means comprehensive income statement, then statement of financial positions and cash flows and notes to the account. Then those are prepared by accountant or the organizations. They are concerning about the other benefits, right? Other benefits and other issues, then tax issues. Due to that reasons, yes, we cannot expect, yes, we cannot um, uh, achieve, we mean users cannot achieve that target. Now users, they are expecting, yes, expecting some information from the financial statements, especially from the income statement. They are willing to take that performance of that organization, right? Performance of that organization, their profit, then accurate profit, then earning per share or the dividend per share, the other details, ratios, and then expenses, actual expenses, advertising cost, and other operating expenses, operating income, non-operating income, dividend, interest, right? Other line items, all are, yes, important to make decisions. Then if we have that accurate details, accurate results, then we can use that results to results for forecasting or identifying the future values. But if we have wrong picture here, wrong values here, it is given wrong picture, wrong picture. Therefore, then we can discuss this type of matter theoretically, but practically it is difficult to use actual data sets, actual data. However, then we can see some relationship with the financial statement information and market information, right? Then even we have that type of issues or the manipulations, we can see some relationship between the financial statement information, and that means financial account information and the market information. That is also one research area. Yes, again then the relationship between market information and the account information, or the impact of account information on the stock market prices or stock returns, right? Impact of accounting information and economic information on the stock prices, again research area, very much popular research area, right? Then financial statement analysis involves all of these component processes: accounting, accounting analysis, financial analysis, and prospective analysis. Accounting analysis, financial analysis, and prospective analysis. These are the component of financial statement analysis, right? Again, if you see this one here, financial analysis here, financial analysis, accounting analysis, and prospective analysis, those are covered under the financial statement analysis, right? Again and again I use this framework, right? We are going to discuss each and every point included in this framework. Then accounting analysis. If we move to the accounting analysis, what is that? Accounting analysis is a process of evaluating the extent to which a company's accounting reflect economic reality, economic reality. This is done by studying a company's transaction and events. Companies, then we can evaluate each and every transaction and events of that organization, of that particular organization, assessing the effects of its accounting policies on financial statements. Now, if you refer that annual reports or financial statement, there are a number of notes and additional information regarding that accounting policies of that organization, right? Then we can assess them to make accounting decisions or the analysis. Now, next one, adjusting the statement to both better reflect the underlying economics and make them more amenable to analyze, right? Here some adjusting the statements to both better reflect the underlying economics. Then we can sometime we may have some adjustment to take the good picture about the analysis. Then again, financial statement are the primary sources of informations for financial analysis. Then financial statements are the major source of financial analysis. This means that the quality financial analysis depends on the reliability of financial statement, that in turn depends on the quality of accounting analysis. Accounting analysis or financial analysis, then the quality of the accounting or financial analysis depend on the inputs. No, inputs. What are the inputs here? Or inputs of this financial statement analysis or accounting analysis? Yes, financial statement. If you have quality input, we can expect quality output, right? Then quality of the financial statement is very much important to determine the quality output of accounting analysis. Accounting analysis is especially important for comparative analysis. Now, if we have real picture and real analysis, we can compare organizations to organizations. Then who are the responsible person for that, right? Then if you need to take the real picture about the organization, right? If you are going to invest publicly, right, in the stock market, then we should have clear information, correct picture about the organization. Otherwise, we cannot make decision, we cannot make success decisions, right? Then it is a responsibility of the relevant persons and organizations. Now you can see, now if you think about the Institute of Chartered Accountants of Sri Lanka, they are selecting, as I told earlier, they are selecting best financial statement of each sector, right? Then they are trying to control, that means they are trying to improve the quality of the financial statement. Disclosure requirement, now minimum requirements is okay. Now all the organizations should follow that minimum requirement included in the standards. In addition to that, then other organizations trying to that means issue some important additional information for the decision makers, especially for the investors, then decision makers, then that type of users, right? Then that type of objective can achieve uh, by this type of program, right? Selecting best annual report. We must remember that accounting is a process involving judgment guided by fundamental principles, while accounting principles are governed by here standard setting bodies. Standards, the complexity of business transactions and events make it impossible to adapt an uniform set of accounting rules for all companies and all time period. Now, then you can see the main task of the standard setting bodies, right? Then they are responsible for that type of actual information, real information, or quality financial reports or financial information. Moreover, most accounting standards evolve as part of a political process to satisfy the needs of diverse individuals and their sometimes conflicting interests. Here, then individual users of this accounting analysis, here investors, then creditors or stock analyst or uh, preparers such as corporations and partnerships or proprietorship, then regulators such as Security and Exchange Commission, financial accounting standard setting body, then auditors and lawyers and educators, all are using this accounting, that means accounting analysis. Again, if you go to this financial analysis, now we are in this level, financial analysis. Previously we discussed prospective, now financial analysis. Under the financial analysis we discuss previously we discussed accounting analysis and prospective analysis. Now next one is financial analysis. Financial analysis is the use of financial statement to analyze company's financial position and performance, right? Financial position and the performance. How to show that financial position? Financial position, yes, we can get real idea about the financial position by using balance sheet or statement of financial position. Statement of financial position. Then how to finance, that means non-current assets and current assets, and all details are in that particular statement, right? Then next one, performance. Financial operating performance of that organizations we can identify through income statement, comprehensive income statement, right? Comprehensive income statement. And to assess future financial performance, several questions can help focus financial analysis, right? Now we can ask number of questions and we can get answers for them to solve that. That means to make that analysis, financial analysis. Now one question, set of questions here. Next you can see another set of questions. Now first one questions is future oriented. Now you can see, does a company have the resources to succeed and grow? That means after financial analysis we can get answers for this type of questions, right? We can provide answers for that this type of questions. Does a company have the resources to succeed and grow? Then company have, whether they they have enough resources to grow, to extend the business. Then does it have resources to invest in new project? Now again, then resource requirement for expansions, right? Then what are its sources of profitability? Then again, what is the company's future? Now again, we are considering the future conditions under the future oriented questions here. What is the company's future earning power? Again, here we can forecast it, right? That is under the future. Then we can provide answers for future situations by using this financial analysis. Not only that, now second one you can see, involve questions that assess company's track records, company's previous track records, its ability to deliver on expected financial performance. Yes, how strong is the company's financial position? By using financial, the statement of financial position, you can uh, make this decision. The next one, how profitable is the company? Then, did earnings meet analyst forecast? This includes an analyst of why a company might have fallen short of or exceed expectations, right? Then those are the another set of questions to provide answers for this type of questions. Then we can apply that financial analysis. Financial analysis consists of three broader areas: profitability analysis, risk analysis. Again, if you go to this one, analysis of sources and uses of funds. Yes, here profitability analysis, analysis of sources and uses of funds, and risk analysis. Right? Profitability analysis is the evaluation of company's return on investment. It focuses on company sources and level of profits and involves identifying and measuring the impact of various profitability drivers. It also includes evaluation of two major success of profitability: margins and turnover. Profitability analysis also focuses on reasons for changes in profitability and sustainability of earning. Here, I think you have clear descriptions regarding that profitability analysis, and here next one, risk analysis is the evaluation of company's ability to meet its commitment or the liabilities. Then in long term, you can see this risk analysis involves assessing the solvency, long term solvency and short term liquidity of a companies alone with its earning variability, because risk is of foremost concern to creditors. Risk analysis is often discussed in context of credit analysis. Credit analysis also a separate part of this cost units, right? Here today we are going to discuss only the theoretical background and the framework, right? Within this framework we have number of analysis, then financial analysis, credit analysis, risk analysis, then you can see prospective analysis, right? Next we can continue them, right? Just today we are going to take some idea about the framework. Then risk analysis is important to equity analysis, both to evaluate the reliability and sustainability of company performance and to estimate a company's cost of capital. Then as you all know, how to compute that company's cost of capital? Yes, I think you already calculated, no? Yes, how to compute? How to determine that cost of capital? Or sometimes you are talking marginal cost of capital or weighted average cost of capital, right? Or the capital asset pricing model. There are a number of models, no? Right? Then how to compute that cost of capital? One is weighted average cost of a WACC. You can use. Another one, risk-free rate plus risk premium. No? Under the capital asset pricing model, risk-free rate plus risk premium. Risk-free rate mean normally you are getting risk-free rate, treasury or the bond rate, no? Bond rate, right? Plus risk premium, or beta, no? Then here we are using risk analysis for that type of calculation, cost of capital determination, right? Next one, yes, prospective analysis and valuation. Again, this is linked with prospective analysis linked with valuation, intrinsic value, right? By using prospective analysis, how to compute this intrinsic value. After determining this intrinsic value, we can make that type of decision. This is the uh, actually this is the most important as well as difficult task, right? This is linked with risk analysis. Now previously we discussed risk analysis. It is very much important for determining cost of capital estimation. Then to determine intrinsic value, then we have to use prospective analysis as well as cost of capital. Then we can go to the intrinsic value. If we have intrinsic value, you can compare with the market value and you can make decision whether we are going to buy or the sell or hold in the stocks, right? Then it is easy to say, but now this is a long process, right? Prospective analysis is the forecasting of future payoffs, future cash flows. Typically, earnings, cash flows, or both. Yes, we have to estimate earning, future cash flows. Then we can discount them to take the present value. Based on that, we can determine the future value of that organization or shares or stocks. This analysis draws on accounting analysis, financial analysis, and business environment and strategy analysis. The output of prospective analysis is a set of expected future payoffs used to estimate company's value. Now, finally, we are expecting to value the business. While quantitative tools help improve forecast accuracy, prospective analysis remains a relatively subjective process. This is why prospective analysis is sometimes referred to as an art, not a science. Right now, details here. Value is a main objective of many types of business analysis. Valuation refers to the process of converting forecast of future payoffs into an estimate of company values. Now, when we are estimating the company value, sometime or the share value or the stock value, then we are using discounted, that means discounted method or the present value approach. Then we are discounting future earnings or future cash flows or future dividends, right? By using that method. Now there are a number of methods: dividend discount approach, then those are important for determining the future value of the value of the business. To determine company value, an analyst must select a valuation model, and must also estimate the company's cost of capital. Again, you can see that difficult task, right? Then most important thing is to determine the future cash flows. That means future payoff and cost of capital. While most valuation model requires forecast of future payoffs, there are certain ad hoc approaches that use current financial information. Right. Then if we can determine future payoffs or estimate or forecast future payoffs as well as cost of capital, then easily we can determine that intrinsic value. An initial steps in business analysis is to evaluate a company's business environment and strategy. Much information about the business activities include in the businesses financial statement, explanatory notes, selected news about its past performance, future plans and strategies is communicated into in its financial statements or annual reports, right? Now to make that type of decisions, then we can use informations are, yes, information from different uh, sources. Yes, here you can see that sources: financial statement, expected note, selected news, and past performance informations given by each organization, and future plans, and that mean director changes and future projects, right? Policy changes, all are important to make decisions, qualitative as well as quantitative. If you refer annual report, there are number of, yes, you can see number of uh, categories, number of information categories here. If you refer this one, this is regarding annual report of Nestle company, right, year 2014. Then you can see that link. Is it possible? Yes. Now you can see one example for this information here. This is financial statement 2014, consolidated financial statement of Nestle Group 2014. Yes. If you refer this type of uh, details here, you can see financial statement first. Yeah, in this case you can see only the financial statement, right? Consolidated income statement 2014, 13. Then investors or the users of financial statement can compare this sales with the previous year. Then trading and operating profit with the previous year. Then profit before taxation with the previous year. Then we can see comparison, right? Then we can refer that earning per share and other details, and also assets, liabilities, and current assets, non-current assets, then line items in the current assets, then all we can total assets and liabilities, current liabilities, non-current liabilities, equity, and other share capitals, all we can compare. And not only that, now if you refer that type of financial statement, we can see cash flows during last accounting years, operating cash flows, then investing cash flows, then financing cash flows, all are here. Then if you refer some other organizations annual report, then we can see 5 years summary, 10 years summary, right? Important details regarding the previous years. But here in this document we don't have that type of things. We can see limited information here, right? Then notes to the accounts here, inventories and other net financial income, then notes to that, right? Then allowances for doubtful receivables, right? You can see number of workings here, goodwill and intangible assets, right? Then this is one of, now this it has 116 pages, 116 pages here. You can see some yes, in some organization you can see stock prices also. Here also you can see, most probably you can see that stock prices, earning per share, dividend per share, and some other important ratios for making decisions. Those are included in the financial statement or the annual reports. Normally we can see that details, right? Ownerships, Right. Now, if we move to another important, yes, important auditor's report, auditor reports and other details here. Auditor reports, opinion of auditors, right? All are here. Then, yes, you can see this share prices, stock prices here. You can see that stock prices, payout ratio, dividend earning ratio, earning per share, basic earning per share. Yes, you can see dividend, stock prices high, stock prices low, and yield ratio. All are here. Then investors can compare, yes, investors can compare this year details with the previous year, and also they can compare with the competitors and industry average, industry norms, right? Then if you go to the basic earning per share here, earning per share of 4.54, right? Then uh, then we can compare with the previous year 3.14, now it has increased up to 4.54. Then here this is the, now not only this, now we have to have some idea to read the income statement, read the cash flow, read the statement of financial position. That is the important thing. Next, our next task is to read them. Right now, we already discussed about the overall overview of that financial statement analysis and business valuation. That is under the business analysis. There are some that mean framework, right? Under that, we have number of component. The ultimate objective of that is to yes, identify that intrinsic value, right? Intrinsic value. Then there are number of analysis, then there are number of assumptions, there are number of forecasting, right? Prospective analysis. Then based on that we can uh, uh, discuss that that mean financial statement analysis and valuation, right? That is under the theoretical background. Then next task is to identify the financial statement before analyzing them. Right now we know how to analyze, how to compare, what is the way of getting that decision, right? All we know, but the important thing is to take this data and read that financial statement and understand well and make necessary adjustment to take the required thing. Now for example, if you need to take operating income, right? In some cases you can, it is difficult to identify that operating income, no line item like operating income, then we have to adjust them, we have to calculate them. We don't know. In some cases, in some organizations, they are giving that earning before interest and tax, earning after interest and tax, right? Earning that means earning before financial activities, right? We can see some line items. In some cases we cannot identify them. Then we should have clear idea to identify and adjust it and to apply into the relevant technique. If you are using ratio analysis at that time, how to use then return on equity, how to apply, that means how to extract values to return on equity. Then return on equity, then what is the way of getting them? Return on equity, yes, how to compute it? The return should be there under the numerator, then denominator should be, yes, equity capital. Then equity capital we can see under the denominator, then numerator should be they are relevant earnings, no, return, right? They are return mean, yes, yes, net profit, that mean profit after tax minus then preference dividend, not dividend, preference dividends, no, preference dividend. If we have, then we have to reduce them, right? In that way we need to have good picture, and we should have good knowledge to read that financial statement, both of you under the financial that mean accounting the accountant or the accounting related job, you are working under the accounting division, then it is easy to understand them, but we can see different practices for service sector, finance and banking sector. We can see different types of financial statements in different line items, right? Then we have to think now. If you think about the operating profit of banking sector, they are paying interest and receiving interest, right? It is under the operating activities, no? That their major activities is to lend that yes money and take their deposits, no, and pay interest. Then that is the major task, operating income, operating expenses. Then you can compare and you can take the operating expenses. But if you think of the manufacturing organization, it is different from that applications, right? Then we can see different situation. Then our task is to identify different financial statement. Next time I hope to discuss a number of financial statement that mean inside the country as well as the outside the country, that we can get the international level annual reports, and we can compare them and we can identify the line items and component of that and best practices we can identify. That is the main task of this type of subject, right? This is not a difficult subject. This is linked with the practical situation, that mean situation, right? Then again we can use this type of things and we can compare this type of data, right? Then stock prices, high price, yes, what is the highest price during the year? 73. Lower price 63 in the year 2015, right? Now if we move to the 14, then 13, yes, this value is 70 and 70, yes, 59. Now we can get some idea through this information, right? Dividend paid here to previous year to 15 and to 20, right? Consistency can be identified through these details, right? Then you can see some other information here. Actually this is not a attractive document, uh, here attractive statement, financial statement or annual report. But if you go back to the, yes, here go back to here. Now you can see additional information in different organization. Now here this is 2011 and 10, 9, 10 and 11. You can see comparison: net profit, net sales, cost of sales, gross profit, selling and distribution expenses, operating expenses, operating income, interest expenses, then different line items here. Ultimately you can see earning per share and other details, right? Then in some cases you can see attractive chart, graph and additional details for making decisions, right? Very much attractive details. Now you can see line chart, bar chart, then you can see different details here. You can see that comparisons during last few years, so comparison between industries also. Then you can use this type of graph and chart for explaining them. Here next time we can discuss that detail, right? Just I need to show this way. Now you can see that this is financial analysis and valuation. Here based on the software or the other model, we can yes, here I got this information from 2010. After that you can see, yes, this book, yes, I got this from a book. Now it was printed in 2010, right? Yes, after that you can see expected, E mean expected value. Yes, you can see forecast for, yes, few number of years, then for that mean up to 2020. This is forecasted value. Here you can see forecasted based on the previous detail, right? We can forecast about the future situation, right? Then these are very much important for making decision, not only for the investment decision, for other purposes, right? We can use we can assign our we can decide our future stock requirement, or the spaces and other budget preparations, right? Then we can use this type of details for the future plan, or preparing our corporate plan, right? We can use these type of detail. In the university system also we are preparing corporate plan, but it is not a attainable one, right? Attainable one. Then what is the reason? Forecast is not, it is not a realistic one, right? Then if you have realistic forecast, then more or less we can see that mean equal results for the expected and the actual, right? But variation is, that mean variance is, yes, more than 200 or 300%, no? That is the problem. Right, here again we can see actual forecast by using the previous year total revenue. We can forecast up to 2020, right? Cost of sales. Now here we can share your knowledge also, right? In the in the practice, private practice, you are using this type of forecast in your organization, sales forecast or production, so whatever that. Not yet. Not normally you are, yes, have you are using that type of software to forecast about the future situations or not? Accountant. About you? You are using focus. What are the relevant softwares? Head office provide all the details, forecasting details, right? Now, if you think about the stock market analysis, now if you read some that means research papers, then meta analysis, there are a number of method for analyzing data, right? They are using some databases for getting that information, and they are analyzing their future values, so the forecast. Then sales forecasting and profit estimations, those are very much important. Now if we need to take financial support or the loan facilities from bank, then we have to provide that type of information. Then future payoffs during next 10 years, or during the lifetime of the project, right? Then we have to provide that type of details. Here again cash flow details. This is forecasted one, again forecasted one. Further we can discuss one by one next time, right? Just I need to mention about them, right? This right now this one Keys Puts Product, Puts Limited, Public Limited PLC. This is this company has won that best annual reports awards last time, that is 2014 or 13, right? I think 13 or 14, right? Now if we compare with other financial or the annual reports, now this is very attractive one, right? Now we can see number of important component here, not only the financial component, financial analysis, right? You can see some yes green concept and green applications, socio, that mean CSR project, right? Then financial highlights here, financial highlights, revenue, balance sheet items. Now highlights mean here you can see only the important details, right? You can see revenue, one is revenue compared with the previous year, and changes also given, right? Changes also given. Next, this is one of the method for analyzing data. Practice. This is the practice, right? This is called comparative financial statement. Comparative financial statement here, this is a change, positive or negative. Sometimes you can see negative changes also, right? Again you can see the practice, right? This is called comparative financial statement. Now important one, earning before interest and tax, EBIT. Here you can see EBIT. When you are preparing that type of ratios, directly you can extract this one EBIT from this financial statement, right? During last 5 years, in case we have only 2, but in some organization it is given just more than 10 years or 5 years. If you take Sampath Bank financial statement, most probably we can see 10 years information, right? Then profit before tax. Now important line items are given: the earning per share, and changes, right? Here interest coverage, capital employed, return on capital employed, return on equity. Here you already calculated and given, right? Then total assets, debts, net, yes. Then when you are applying your that means when you are preparing assignments, then you can directly gather that information to prepare that ratios, right? Here market price per share, another one, market price per share here. Yes, you can see that comparison, right? This is relevant to the food product limited, right? Then further we can yes, today I am not going to discuss in detail, right? Next time we can discuss about the line items and the content and important line items like this earning per share, EBIT, PBT, PAT, you can see PAT, profit after tax. Then another highlights here, just I need to show this results, right? Yes, profit after tax. Now we can see highlighted one. Now profit, revenue, shareholders funds. This is for users, right? Now then some are not aware with the financial situation or the accounting background. They are not with the accounting knowledge, right? Then anyone can understand now what is that now. Then that means non-accounting managers, they are not aware with the accounting process, right? Then it is difficult to extract some important value from the financial statement, but here you can see extracted value, just you need to read it, right? Now if I yes, if we assume now we don't know about the financial statement or the income statement or a statement of financial position or cash flows, now we can see important elements here. This is a disclosure. Now this is not a minimum requirement, right? This is behind that, right? There's no any other conditions or the IFRS or LKS for that, right? That's profit after tax, revenue, and shareholders funds. Yes, yes, billion, rupee billion here, here also rupee billion, here rupee billion, percentage also given. Another important one, net revenue during, yes, net revenue and growth and employee, shareholders fund, right? Operational highlights. Now this is regarding their products and achievement, right? Introducing new product, and sometimes you can see that CSR activities also. Yes, the product diversification, not only the financial statement here, product diversification. Then investors can get idea about the organization and their stability and their weak points and sustainability, right? Or dividend paid 127 billion. This is very much important information for the investors. dividend, our brand, here you can see the board of directors and their capabilities and qualifications, and you can see their skills and other experiences all are given here, and their names. You can see some famous profiles also there, no? Then those are important before deciding your, that means before making your investment decisions. Now here you can see, then management team, you can see their names and relevant positions. In some cases you can see some famous photos also. And also they are using this type of annual report for annual report as a marketing tool, no? Marketing tool. This is very much interesting topic and course in it. Now we have to work with that practical situation now, right? Then we have to read this type of annual report, and we have to summarize them, we have to understand them, we have to think about the investment opportunities of that type of organization, whether we can earn profit by investing this type of organization, or how about the risk conditions for investing in this organization. You can comment based on your details. Now after analyzing your data by using different technique, you can say something about the organization, right? Yes, it has 160 pages. Right now you can see some advertisement and famous characters, right? This is for that means shareholders and investors as well as other responders in the market, right? You can see that details. I am not going to discuss all the things here. This is regarding their uh, employee categories and profiles, then male and female combinations. Here female 4%, you can see, right? In some cases or the research, we have to use this type of details, right? Male 96%, right? Recruitment detail, turnover and other details. In some organization they are revealing that best employee in each sectors, each sections or branches. Then stakeholder engagement and value creations. You can see that details, right? Value added statements. Then corporate governance and good governance. You can see that audit procedures, corporate governance framework. Here you can see right? No need to provide all those things under the financial statement as per the LKs, right? But these are the, yes, uh, important information for the investors, right? Beyond the financial, that mean standards, financial accounting standards, reporting standards. Yeah, this is the, yes. In some cases we can use content analysis whether they are applying some standards or not. That is also under the accounting study, right? We can do that type of research too. Now, if you link your statistics knowledge and this financial statement analysis, then you can do good research. CSR project also, they are now, is this is the organization structure and IT governance framework here. And in some cases you can see that dividend announcement, director changes, future planning, future expansions, that mean capital investment, uh, future corporate plans, all you can see, right? Those are very much important for the investors and the users of financial statements. There are a number of pages. We are in 67 now out of 160. Sustainability reporting. Now you can identify the component of that, right? Yes, here corporate governance, then next one sustainability reporting, enterprise risk management, yes, then interest rate risk, you can see interest rate risk. We have read it, right? Fraud and corruptions, you can see here, fraud and corruptions, that investigation of fraud and corruptions, yes, business process and product liability risk, risk exposure to credit facilities, then financial calendar, you can see under financial reports. Now this is the financial reports. Previously we got that financial highlights, no, highlights. Now this is the total report, statement of comprehensive income, statement of comprehensive income here, right? Then profit for the year, and profit for the equity shareholders here. Then financial position, balance sheet here, non-current assets, current assets, equity and liabilities, stated capital, revenue, reserves, non-current liabilities, borrowings and deferred taxation, employee benefit liabilities, current liabilities, and total equity and liabilities during last 2 years, group as well as company, right? Then cash flow statement, cash flow from operation, operating activities, cash flows from investing activities, cash flows from financing activities, and finally you can see cash and cash equivalent at the end of the period. You can see that values, then whether it is balance or overdraft. Then cash statement of cash flows also here. Yes, again you can see the same results. Statement of changes in equity changes statements also here. Then notes to the accounts, notes to the financial statement, notes to the accounts. Then here you can see that type of basic policies and details, and other accounting, yes, accounting policies here, accounting policies, relevant applied Sri Lanka financial reporting frameworks or the standards, taxes and other adjustments, employee benefit liabilities, other descriptions here. You can see number of notes here, notes for the financial instruments, that mean property, plant and equipment, and share prices. Market risk analysis also here, interest rate risk, foreign currency risk, effect of currency translation. Now actually, in addition to the theoretical background, now uh, you can search about the practical situations under the market risk and interest rate risk and foreign exchange risk, foreign currency risk. You can see different types of applications here. If you refer number of annual report, then you can get clear idea about the practice and the theory, difference between the theory and the practice. How far apply that theoretical background, that mean under the practice. This is regarding the borrowing and deferred taxation, employee benefit and liabilities, investment. I already uploaded this document, you can refer, then otherwise you can, yes, this is regarding, this is also very much important, number of ordinary shares. Now if you move to this one, number of ordinary shares, then you can compare. Now that means reader should be able to get idea by reading this type of things. Now shareholders, shareholding range, right, less than or equal to 1000, right, we again we can see frequency distribution, no, we already discussed here, frequency distribution less than 1000 number of shares, 1000 to 1 10,000 10,000 and 1 to 100,000 100,000 and 1 to 1 million, over 1 million, right.
Sir, sir, sir.
Different sectors, right? Then we can compare them with some specific line items and some additional information. Okay. Next time we can continue these discussions. Now, today I got only this financial statement to discuss. Uh, right. This is from Keel's food products. Then next time we can discuss this type of a standard and well structured annual reports, and yeah. uh, progress, and how far they are applying standards, and they are following minimum require disclosure requirement. All we can discuss next time. And is it okay? Do you have any doubt regarding this content? Now I got some uh, details slides, right? Then it is easy to read it, right? Just you can read it and understand it. uh, Next time we can discuss about the financial statement and how to read financial statement. Okay, thank you very much.